Welcome to Subramani. Please hit the bell icon. Please subscribe. I need to increase my subscriber base to at least 100,000. Come on, I'm much lower than that. So here, there's one question which I keep getting asked regularly wherever I go, and I'm going into a function tomorrow. Where should I invest? Right? Where should I invest now? The worst, even worse than that, I don't invest in equities. I hope you don't mind it, right? So let me start by saying where you invest is your problem. To tell you where to invest, I need to know you. I need to know your risk profile. I need to know how patiently you can sit through bad periods. I need to know when you need the money. I need to know whether you will panic or not panic. I need to know a host of things before I can tell you where to invest, right? So I'm not willing to say that to anybody and everybody, and I'm just saying, oh, I invest in equities. I'm 90% in equities. I'm 100% in equities. I'm 80% in equities. Doesn't really matter beyond a point what percentage you are in equities, as long as, my dividend is enough to cover my expenses. So whether it is 3x, 4x, 5x, again, doesn't matter. It meets my needs. So I can only tell you where I invest and why I invest. So my answer is where do I invest? I invest in equities. Do I invest in direct equities? Yes. Do I invest in equity mutual funds? Yes. Why do I invest in both? Because there are some things which I can never capture. I can never capture the US market going through LRS. It's too much of a headache, right? So it's easier to put money in an Indian mutual fund which invests in the US, right? Similarly, REIT, international REIT. Can I ever get into international REIT on my own directly? No, not possible. So I get into a fund of funds which is an international REIT. So some of these things I do through mutual funds, but otherwise I'm a direct equity person. One person whom we have to all thank for for making equities very popular, not only in India, not only in the US, but also the world, is Jack Bogle, right? Vanguard funds. This is one company which kept on increasing its market share without increasing its profitability. It increased its profit, yes, but not profitability. It kept dropping rates and it did a fantastic job. There is data to show that people have saved in the US alone about 1 trillion in fees by investing through Vanguard funds. That's not small. So earlier, when people asked me, maybe 5 years back, 10 years back, or 20 years back, also I was investing in equities. 40 years back also I was investing in equities. And my answer would be, where else can I get, if I invest in a company like HDFC, I get somebody like Mr. Deepak Parekh and Mr. Aditya Puri to work for me for a small fee, right? There's no fee because I invest directly in their equity. So there's no fee. They grow the company and I get the benefit, right? That golden dust that they create falls on me. Similarly, whether it is a Narayan Murthy or Ratan Tata or anybody, am I ever going to be able to afford them to work for me? No, but I can create a portfolio where they manage their company and Ambani, Adani manage their companies and I'm a shareholder, so I benefit. So therefore, equity, the best companies in the world you can own, and for no fee, they will give you good returns. Yes, it is important for you to know which companies to pick, research, etc., but equities was the way to go. Then sometime in 1993, one thing happened. There was something called awesome transparency, because you had organizations like National Stock Exchange coming, and that forced the Bombay Stock Exchange, and perhaps through a diktat of SEBI, to have transparency, which means if my broker tells me that he bought Infosys for me at 12 hours 31 minutes, I know at 12 hours 31 minutes what was the price of Infosys. I can go to the back end of the BSE and get a copy of that price, right? So can he ever cheat me on pricing? It is impossible, because the contract is a real-time printing, the message is a real-time thing. So he sends me a message at 12:31, so I at 12:32 perhaps. So I know at what price it is being traded, I know what price he has bought. So I don't have to check the back end to see whether the deal is done honestly or dishonestly. Therefore, I can employ somebody else to do it. Otherwise, I would have to trust the person. I mean, some of the people would go into the ring to buy shares, and then Hindalco let us say Hindalco, I remember, because it used to be a high price share even there, it used to be say 700, then you would get quotes of 675, 725, which means you wanted to sell, he would buy it from you at 675. If you wanted to buy, he will sell it to you at 725. That kind of a gap used to be there, and you have to just trust your broker. So which means you have to trust the person going there. But today, with price discovery happening electronically, I don't have to worry about that, right? Then there are mutual funds and mutual funds and mutual funds which are being managed. Then there is ETF, then there is an index fund, and then there is private equity, or sorry, there is direct equity which you can do yourself, right? So all these have fantastic transparency. So two things, costs and transparency, and regulator, because there is a regulator who is looking into these transactions on a day-to-day basis. Now, cut to real estate. You have no clue at what rate the deal is getting done, right? So if you have invested in a fund which invests in real estate, you have no clue how much money the broker, the seller of the property, and your manager are making in each of those transactions. And it does happen. We have seen it happen. I've seen real huge kickbacks in transactions of even as small as say 6 crores. 6 crores is not a huge transaction, but even in that there was a kickback of almost 3%, right? So that is going to make it very inefficient. So any other asset class, I'm not even talking of things like art, any other asset class which is private equity, private credit, or venture capital funding, any of these things. Venture capital funding is a form of private equity, whatever you want to call it, or early stage funding. Any of these things, you have no clue. If you are not the person sitting with the entrepreneur who is investing, you have no clue how much money that whole chain is making, and I can tell you it is huge. So now I have enough reasons to say that there is not enough transparency in any of these private debt or private credit or real estate or REIT or cryptocurrency, right? In all these, you have no clue how much the whole line is making based on what you are paying. So to me, the risk in all these things increases. Illiquidity is a serious problem. I know people who have got ESOP in private companies or even in listed companies where there is just not enough volume, because if you get an ESOP in an HDFC bank or ICAI bank or Infosys or TCS, you don't have to worry that the price will be manipulated and things like that. But I know 2 finance companies which used to manipulate its share price to make the ESOP look better or to reduce the number of shares. So you'd say, oh, you're entitled to, I think you are entitled to 800 shares, but since the prices have gone up so much, we will make it 700 shares or 600 shares. I've seen this happening. They manipulate the share price to reduce the number of shares to be given for ESOP. So we have seen this happening even in case of a listed share. What happens for unlisted? It is much worse. So if you are stuck in alternate assets without liquidity, what do you do with it? You can say my net worth is 4 crores, 5 crores, but if your share is only seller for 1 month, you have no liquidity. So suddenly you find that your net worth is 2 crores. I remember one international fund house, they still operate in India in a different name, tell me that when you own 6% of the country's market cap, your NAV is not true because you will never be able to sell. Do you think LIC will be able to sell 25,000 crores worth of NTPC? No. Will they be able to sell even Tata Power and things like that in a big way? No. So there is illiquidity for them because of the size of the portfolio. So you tell me that the costs are low, there is transparency, there is good supervision, and I know that the back end is clean. Why would I invest in other asset classes where I have to worry about the back end, leakage, commission, kickbacks, all these things happen. Look at people who deal with real estate. Suddenly their net worth goes up. Suddenly things are happening. You're making more and more YouTube videos saying why real estate is great. But largely it is just that you're being paid to say those things, right? So if that kind of risk I run with real estate, venture fund, private equity, etc., I'd rather stick to direct equity because I know direct equity. You don't know direct equity, stick to index funds. You will not do badly. You will do much better. But yes, it's dull, boring, and not so exciting, like Morgan Housel says. So dull, boring things is not something which people want. Not even people running family offices want something simple, because they have to look like they have created the alpha in front of their whole family. So whatever be the reasons, to me it's equity. Thank you.